Hi, my name is James and I'm from the California Department of Tax and Fee Administration. We are responsible for collecting sales and use tax for the state of California. And I want to start by situating what a sales tax is. All right. Generally, all sales are taxable unless specifically exempt or excluded by law. In California, sales tax is imposed upon you, the business owner. It is your tax to pay. You have the ability to collect reimbursement from your customers at the point of sale. But the reason we're doing this today is because it is your tax to pay whether or not you collect it from your customer and whether or not you collect it correctly from your customer. In those situations, you're going to create a tax discrepancy that's going to come out of your pocket. We don't want that. We want you to set up your point of sale systems, collect the tax, keep it safe, and then pay it when it's time to file your tax return. In the state of California, we have a state rate of 7.25%. 6% goes to the state general fund. Another 1.25% goes to the local authorities. In addition to that, we have what are called district taxes, and these are the taxes that you, the voters, approved. When you vote, the bill that you're voting on contains language that stipulates what the tax rate is and where it applies. It can be done at the neighborhood level, the city level, the county level, and it's cumulative. So if you live in neighborhood, city, county, you're going to get all three. It's important for you to know where district taxes apply. When you're in the habit of delivering items, delivering to another area may create that tax discrepancy that we want to avoid. The easiest situation to understand how district taxes impact you is if you have a store location, someone comes into your store, you charge the district tax for your store location. That's not complicated. It gets more complicated if someone comes to your store, buys a big item, and asks that you deliver it to them. In that situation, if I'm in Roseville, my store out there would be 7.75%. If I deliver to a customer who purchased it, and they're in Sacramento, delivering by my own vehicle or a vehicle exclusive to my company means that that is a Sacramento rate, and that's 8.75%. That's a full percent that you need to collect at the point of sale from your customer. Now there's another scenario where if you ship by what's called common carrier, that's FedEx, UPS, Post Office, or a publicly available trucking company. If you ship by that, then we can't establish which district tax applies, and you're only responsible for the state rate of 7.25%. Otherwise, delivering by your own vehicle, you need to collect where your customer is accepting delivery. This also applies if you're selling out in the field. If you have sales staff, if you attend fairs or markets, these are going to be situations where you need to collect sales tax based on your location in the field. This also applies to wedding photographers, caterers, construction contractors. These are all organizations that are going to need to pay special attention to what the district tax rate is, where they are doing business. And a quick note about leases. Now, a lease for the purpose of taxes is considered a perpetual sale. So leasing items, renting equipment, that also incurs district taxes if you're dropping it off in another district. We have a lot of resources on our website that can show you what your district tax rate is. You can look it up by address, and if you're in the business of delivering items or doing work in the field, I suggest you check early and often what your tax rate is going to be. Now, in the state of California, anyone selling tangible personal property is required to have a seller's permit. A seller's permit allows you to make sales in California. It provides you with a seller's permit number and lets you issue a resale certificate so that you can buy inventory items without paying tax. It does not allow you to buy items for personal use, and you have to have a seller's permit issued in the owner's name for each business address. As I mentioned, all sales are taxable unless specifically exempted by law, and you want to keep documentation that shows that the law applies to you. The taxpayer is responsible for maintaining and providing documentation for examination. All right. Now, one of the common deductions that are available to business owners is sales for resale. As mentioned, you can buy inventory without paying sales tax. To do that, you need to issue a resale certificate, which is a legal document. You can find it on our website as a PDF, which you can print and fill out. And it states that you are purchasing an item for resale. You provide your seller's permit number, the name of the vendor, and a brief description of the items available. Then you sign it. Resale certificates are valid if they are taken timely and in good faith. So timely means at the point of sale. You can't wait until an audit to go find them. You need to have them on record. And they need to be taken in good faith. Where you declare what your business is and what you're buying, that has to make sense. If you're a dressmaker buying cloth for the purposes of resale, that makes sense. If you're a dressmaker buying a vehicle for the purposes of resale, that would not be in good faith if I were to accept that. Now, you can send this to your vendors. You can also accept it from your customers. But it is important to note that people aren't required to take resale certificates. All right, they can reject them if they're not in good faith, or they can not take them as a matter of policy. Big box stores, especially, you'll see the lines. They're not going to stop everything to run your resale certificate. In that situation, you can go ahead and buy the item, keep your records, and then when it comes time to file your tax return, you can take something called a tax paid purchases resold adjustment and get credit back for any sales tax you paid on inventory items. If in the course of your business you take any seller's permits, you're supposed to go onto our website and verify a seller's permit number. You can put it in, and our website will let you know whether or not it is valid, and that's to protect you, to make sure that's a valid seller's permit. Misusing a resale certificate is a misdemeanor, and there is a penalty of $500 or 10% of the transaction, so please don't do that. In addition to sales tax issues, we collect what's called use tax, and this is meant to level the playing field. If Sacramento has an 8.75% sales rate, Oregon has a 0% sales rate, why not go buy all of your items from Oregon? Okay, if you can get a better deal in Oregon, please do, but the deal shouldn't be because of the sales tax rate. We don't want to impact local businesses. In that situation, we have created a use tax which you are obligated to report. So if you buy items from out of state or online without paying sales tax, you are going to have to report that on your sales tax return as a purchase subject to use tax. The rates are the same, so if I were to go down the street and buy the item at 8.75%, or if I bought it out of state for 0, I need to declare it at 8.75% based on where I've used it. We're not talking about inventory. What we're talking about is equipment, machinery, uniforms, business supplies, anything that you're buying to use for your business. You need to declare the use tax. You also get a credit if, for example, you paid tax out of state, say 5%, then you can get credit for the amount you've paid, and you'll just be responsible for the difference when you declare it on your sales tax return. Now, use tax also applies in a situation where you've bought an item for inventory use, but then took it out for your personal use. In that situation, if you've taken an item out of inventory for gifts, donations, free samples, employee meals, all right, in that situation, you're going to need to keep your records, and you're going to need to declare it as a purchase subject to use tax. So people ask about items like spoilage or shrinkage, obsolete items. If it goes in the trash, if it goes out the door in an employee or customer's pocket, you didn't use it, you didn't sell it, so there's no sales tax due. Sales tax can be reported on your return for the CDTFA. The first line is total gross sales. The second line is purchases subject to use tax. You can also report it on your income tax return. You don't need to do both, just you have to report it once and then the money gets to us. Another situation that comes up, a common deduction, is sales in interstate commerce. Now, sales that go outside the border of California are not taxable. It's in the Constitution. We can't tax what goes on in other states. So if you have such sales, you're going to want to keep bills of lading, freight invoices, delivery receipts, and correspondence showing that this was a sale that took possession out of the state. Recently, there was a Supreme Court decision, Wayfair versus South Dakota, which said that sellers who meet a threshold for sales in a state are required to register for a seller's permit and pay tax regardless of physical presence. This is an attempt to collect a fair share of tax from online sales. The baseline sales threshold is $100,000 or 200 individual transactions. If you hit that threshold in any state, you're going to need to go find their version of me and ask whether or not it's time to get a seller's permit. Many states have a higher threshold, so once you've reached that, you may not need to get a seller's permit, but you'll want to keep tracking it. Other states will require you to get a seller's permit, and you'll have a second filing obligation for their state. Starting April 1st, 2019, California sellers who reach $500,000 in total gross sales in California over the previous 12 months need to collect district taxes based on where the item changes hands, regardless of the seller's physical presence. Previously, I had mentioned that sales shipped via third-party common carrier, UPS, FedEx, Post Office, were only subject to the state rate of 7.25%. If you hit the sales threshold of $500,000, from that point on, you're going to need to be collecting your customer's tax rate. So a sale from Sacramento to Los Angeles shipped by FedEx, previously 7.25%. Now you're going to need to collect the Los Angeles rate. As a part of these changes, we have also developed marketplace facilitator laws. Previously, online websites, which allowed you to sell through auction or through an online marketplace, were not responsible for collecting tax. You, the business owner, were responsible for it and keeping track. Starting October 1st, the marketplace facilitators are now responsible for collecting and paying that tax. You, the business owner, no longer are responsible. When you're filling out your tax return, you want to declare any amount that you sold through a marketplace facilitator. And then on page 3 of your tax return, which is deductions or non-taxable sales, you can back it out in the box that says other deductions. You can select marketplace facilitator, put in your volume of sales, and that won't be factored into the tax amount for the rest of the return. If you only sell on marketplace facilitators, you don't sell in person, you only sell online through other people's websites, then you may be eligible to cancel your seller's permit, in which case you should contact our office for more information. When you're filling out your taxes, you're going to need several records. You're going to want to make sure you keep track of your sales invoices, especially things showing items like cold food sales, cash register tapes, sales journals, purchase invoices, and canceled checks, especially canceled checks from the federal government showing non-taxable sales, shipping documents showing out-of-state sales. You're going to want to keep your resale certificates showing sales for resale. These records need to be kept for 4 years. Other agencies require you keep them for 8, so you don't want to throw them away at the end of the 4-year period. We've got a new website, and we want to encourage everyone to get a username and password. If you haven't gotten a username and password yet, you want to give us a call at the call center. They're going to be able to walk you through the entire step. The process involves requesting a security code, which we will mail to you in 5 to 10 business days. Or you can give us a call, and we can give you that security code over the phone if we determine your identity, verify your identity. Doing so will allow you to register new business activities, close locations, add locations, request payment plans, request refunds. You can see your history, print past returns. A lot of the amenities on our new website are behind the username and password, and we want to make sure you get set up for that. Those of you in the Sacramento area, we have a location on 3321 Power Inn Road. You can come in, bring in your books, and we'll help you file your tax returns in person. This is the customer service center that I had mentioned, 1-800-400-7115. We have the ability to hop online with you and follow along with what you're doing on our website. We can walk you through an entire username and password setup. We can walk you through an entire tax return. The best time to call is between 8 and 10 in the morning and not the final day of the filing period. Okay, so the question was, does a IT company need a seller's permit? Individuals, corporations, any entity that sells tangible personal property needs a seller's permit. So if they are offering software for purchase online, that is not tangible. That would not be taxable. They would not need a seller's permit. If they are offering software on a thumb drive or CD-ROM, things like that, those are taxable items and they would need one. If they are selling non-tangible software in conjunction with the sale of a tangible item, so for instance, they would sell the computer, but you get the non-tangible software with it, then that would be taxable because it's part of the tangible personal property that's being sold. So that depends. You may want to check. We have a website. It's cdtfa.ca.gov/email. And that goes to our tax advice desk, and you can send them questions like that and get a firm written answer, yes or no, you need the seller's permit. But for an IT company, it depends if there's tangible personal property being sold. If they're a distributor of another company, they may still need the resale certificate, in which case they would collect, they may still need the seller's permit, in which case they would want to collect resale certificates from the retailers that they're selling it to. All right? And then again, if it's not tangible in the first place, then it doesn't matter. But anything physical that you can feel, weigh, touch, measure, those are going to be taxable. Okay? If you sell on a third-party marketplace run by a marketplace facilitator, and that's all you sell, you don't need a seller's permit. All right? You can sell through them, they'll collect the tax and pay it to us. But this would prevent you from selling at a local farmer's market. This would prevent you from starting your own website. In that situation, you would need to either get a temporary seller's permit from us for that farmer's market or keep your existing seller's permit open, bearing in mind you will have a filing requirement whether or not you have sales. In that situation, you'll just need to go ahead and file a $0 return with us. Thank you for your time. Again, my name is James Barrett from the CDTFA. If you have any questions, you can call me. My phone number is 916-704-6533.